Hello, my name is Frédérique Carrier. I'm co-chair of GPAC, the Global Asset Allocation Committee for RBC Wealth Management. I'm here with Elsa Lignos, Global Head of FX Strategy, on the 3rd of July 2023 to discuss the very topical theme of de-dollarization. The term de-dollarization is used in two ways: to mean the loss of the US dollar's status as a reserve currency, much like sterling was displaced a few generations ago. It's also used to refer to countries seeking to reduce their reliance on the US dollar for their transactions. Hello, Elsa. There are many worries at the moment about de-dollarization. These concerns stem partly from huge geopolitical shifts, from deglobalization. A recent trigger was the US and the EU imposing unprecedented asset freezes and sanctions on Russian assets. If you shut down adversary economies out of the dollar payment system, the countries will work to reduce their exposure to a financial system dominated by a country they do not want to be beholden to. So what are you seeing with respect to countries accepting payments in currencies other than the US dollar?
Well, there have been a number of high-profile examples recently. The most obvious is Russia increasing its share of renminbi payments and accepting renminbi for its oil, and increasing its share of renminbi in its own reserves. Similarly, India has been using renminbi to buy oil from Russia, and we've heard reports of Iran also accepting renminbi payments for its own oil exports. But I would note that we've seen this sort of trend happen over many years, and not just for the renminbi. In fact, when the euro was first introduced over 20 years ago, we did see a rise in the use of euro for cross-border payments, particularly on a regional basis. And it's a long way from that to full displacement of a currency in the global infrastructure.
So it sounds like the Chinese renminbi is a serious contender, perhaps to replace the dollar. According to the State Administration of Foreign Exchange, the Chinese agency, the renminbi now accounts for close to half of China's cross-border payments and receipts. That's up from virtually nothing 12 years ago.
And that's a natural development as China moves up the global supply chain in terms of value. So rather than just being a manufacturer and exporting lower value goods, it's actually moving up the global value chain. It's natural that it will denominate more of its own exports in renminbi. That said, the renminbi still accounts for only 2% of global cross-border transactions. So it's a tiny share of not just overall global trade transactions, but global financial transactions.
One reason the US dollar has become the world's reserve currency is there are so many dollars out there in the world after decades of the US running huge trade deficits. How can anyone else, the Chinese for instance, how can they get to a challenging position without doing the same thing?
Well, those dollars out there in the world that you allude to, that's the US net international investment position, which is very negative after years of running large current account deficits, like you said. But that's not a prerequisite to being a global reserve currency. What is needed, though, in a world post-gold standard, is the ability to mop up the imbalances of the rest of the world, i.e. to run current account deficits when that's required or current account surpluses when that's required. And the US has played that role for the last 50, 60, 70 years. And more recently, that role has demanded large current account deficits on the part of the US because the rest of the world has excess savings and insufficient demand.
But China is exporting capital through the Belt and Road Initiative.
Absolutely. So exporting capital through the Belt and Road Initiative, and of course, because it runs such large current account surpluses, it buys a lot of foreign assets. What it's not able to do, which is what the world needs at the moment, is mop up excess foreign savings. And it's really that which is the biggest obstacle, hindrance to China's role as a reserve player.
The capital controls in China, or the perceived lack of transparency, could that come in the way of the renminbi becoming a reserve currency?
Of course, it's a fundamental obstacle to China's role as a reserve currency, because it's not just the capital controls, it's the lack of a derivatives market or a deep and liquid sovereign bond market, for that matter, that would allow foreign players to invest and then hedge themselves if necessary.
Is it reasonable to say that while the dollar is losing some market share to the renminbi, it remains ahead of the competition and that it's unlikely to lose its status as a reserve currency overnight? After all, it took sterling decades to lose its reserve currency status. Is there a read across here?
There is, and I think it's important to also note the differences. When sterling was the world's global reserve currency, it was at a time where we were on the gold standard, and so there wasn't that same necessity to mop up the excess imbalances of the world. What we see at the moment is that it's not just the role of the dollar in global transactions. That's only a part of the dollar's status in the global economy. The second one, of course, is its status in reserve holdings, and that's also important. But the real key is the dollar status in the global financial architecture. So it's the ability of other countries, other investors, corporates, and so on, to borrow in dollars, issue liabilities in dollars, hedge themselves in very deep derivative markets. That really doesn't exist for any other currency at the moment. Could that rise over time? Absolutely. And you've seen the rise of the euro in certain regional examples, but also you'd expect that to happen for the renminbi. It's a very long and slow process in terms of acquiring that liquidity and that depth of financial markets so that global foreign players can use the currency extensively.
Even if the dollar loses more market share, is that necessarily negative, bearish for the currency, for the US dollar?
It's a really interesting question because people have always talked about the dollar's exorbitant privilege. So this idea that because of its status as a global reserve currency, the US is able to borrow at much cheaper levels, and most importantly, I mentioned earlier the net international investment position which the US has and is negative. The US actually earns more income on its foreign assets than it pays out on its foreign liabilities, even though the stock of assets is so much smaller than the stock of foreign liabilities. And that's really the exorbitant privilege in a nutshell. And yet, I would argue that's most important if the US is running large current account deficits. Now, in the last few years, the US has run some very large current account deficits, which in my view was a result of post-pandemic spending patterns and the disconnect between spending on goods and spending on services. As spending patterns normalize, and I don't think they fully normalize just yet, we will see the US current account position improving, as it has done in the last few quarters. And more importantly, we've gone from a world where the US historically was a large net importer of energy to one where the US is basically close to being energy neutral. So I think structurally the US is far less likely to run large persistent deficits going forward. Coming back to your question, is it negative if the dollar loses its status as reserve currency? Well, over time, you could argue, yes, of course, the fact that there's less demand for dollar assets in theory should be negative. But it depends on whether the US is trying to run large current account deficits. And if it's not being forced to absorb that capital from abroad, you could actually see an environment where the dollar doesn't have to go down at all. This is not an idea of countries selling their dollars by force and effectively flooding the global economy with US dollars. And this will happen over many, many decades and over time as other currencies rise to pick up the mantle.
Which currencies benefit from the US dollar's reserve status slowly slipping?
So for a long time, people thought it would be the euro. It was the natural competitor to the dollar in this regard. And yet the Eurozone crisis really put the brakes on that, because we went from having what appeared to be one very large sovereign bond market across various different countries to something which was a lot more fragmented. And we saw the euro's share of global reserves slip over that time period as a result. Now we are seeing a very slow decline in the share of dollar reserves and euro reserves over time. The IMF actually just released data for the first quarter of 2023, and the dollar share of reserves slipped from 58.6 in the fourth quarter to 57.6 in the first quarter of this year. That's come down from 70% though 20 years ago. That gives you some sense for how slow this decline is. The euro share also slipped a little bit, just over 20% to just under. What was the beneficiary? Well, it wasn't the renminbi. The renminbi share actually in the first quarter of this year also slipped a little bit. It has risen over the last 7 or 8 years, but again, very, very slowly. It went from being 1.1% at the end of 2016 when it first was reported to just over 2% now, 2.5%. Smaller currencies are getting the benefit. In the first quarter, we saw very large discretionary buying for the other category. These are currencies outside the Australian dollar, the Canadian dollar, the Chinese renminbi, and of course outside the majors, sterling, yen, Swiss franc, euro, and dollars. The IMF doesn't tell us which currencies they are necessarily explicitly, but it would be things like the Korean won, the Swedish krona perhaps, and currencies similar to those. Again, though, these are very small shares of global reserves. The global reserve market is roughly 12 trillion US dollars, and we're talking here about a share of 2% of that, split across many different currencies. Coming back to your original question, who benefits? And all these smaller currencies will see their share of capital inflows over the coming decades, but it won't be enough to invest as a single trade idea.
Elsa, thank you very much for sharing your insights with us today.
Thank you.
If you have any more questions about de-dollarization or deglobalization, a theme we have written extensively about in our Worlds Apart series, please contact your investment advisor or your relationship manager. Thank you for listening.